Today we're counting down the best real estate markets in 2024 based on insights from the annual Urban Land Institute's Emerging Trends Report. These metro areas show the strongest prospects for real estate investment in 2024, and I'm going to break down the opportunities in each market so you know exactly what to buy. This Pacific Northwest metro is back on the list at number 10 for overall real estate prospects. Seattle leverages a highly educated workforce and thriving technology sector to drive its economic growth. Major employers like Amazon and Microsoft continue expanding, and the region attracts educated millennials drawn to its natural amenities and vibrant urban scene. Seattle endured remote work departures but maintains solid office and multifamily fundamentals. Investors should target innovative new developments, capitalizing on the area's talents. Seattle's best bets: tech office space. Target innovative new or renovated offices near Amazon and Microsoft campuses to attract tech firms. Focus on creative layouts and top-of-the-market amenities. Multifamily housing. Seattle struggles to keep up with population growth due to undersupplied housing. Focus on apartments near transit hubs and tech campuses, as well as mixed-use projects. Industrial facilities. Strong logistics demand, but constraints on the available land limit supply in the market. Look to infill warehouse sites that can meet growing last-mile delivery needs. Life sciences. Global health companies and university medical research drive demand for additional lab space. New development along the Lake Union waterfront remains very desirable. Raleigh Durham. This fast-growing North Carolina metro has fallen to number 9 in the Emerging Trends survey from a number 1 position in 2021. Affordable housing, university presence, and technology and life sciences growth make Raleigh Durham a magnet for new residents. The area saw rapid absorption of new apartments and significant office leasing in 2022. Investors should focus on multifamily housing and creative office or flex space near the region's talent centers. Raleigh Durham's best bets: multifamily housing. Absorption of new apartments has been rapid. Target development or acquisitions in affluent Northwest Raleigh and around Research Triangle Park. Flex office space. Look for creative spaces near top talent pools like Duke University and Centennial Campus. Co-working and space for startups is also a big draw. Mixed-use projects. Developments that blend retail, office, and multifamily in walkable nodes are highly attractive. Focus on areas like North Hills and downtown Durham. Industrial facilities. E-commerce and distribution firms drive demand for warehouses given Raleigh's location near ports. San Antonio. This South Texas hub lands at number 8 for markets to watch in 2024. San Antonio offers business-friendly policies, no state income tax, and low costs that attract corporate relocations. Toyota recently announced a $400 million investment into their manufacturing plant there. San Antonio has also been ranked as the most affordable major metro city to live in Texas. Investors should target industrial facilities, multifamily housing, and mixed-use developments. San Antonio's best bets: industrial facilities. Toyota, Amazon, FedEx, and others are expanding here, demanding new warehouses and distribution centers. Multifamily housing. Ongoing in-migration to the San Antonio area continues to fuel apartment demand. Focus on suburban communities to align with job growth. Mixed use. San Antonio's strong retail sector presents chances to develop vibrant live-work-play communities, especially along the I-10 corridor. Creative office. Low costs and tech growth allow for office space catering to emerging firms, especially in the downtown area. Boston. Despite high costs, Boston ranks at number 7 based on its world-class talent pool. The city leverages elite universities to lead in fields like biotech, robotics, and computing. Though remote work dented the market's office demand, Boston's educated workforce and innovation ecosystem remain alluring for office users. Investors should focus on niche lab space near top universities and hospitals. Boston's best bets: lab space. There is major demand from pharma and biotech research near elite universities and hospitals. New lab towers are commanding very high rent rates. Multifamily housing. Apartment conversions are a strong possibility here. Mixed-use projects. Blending residential, lab, and creative office space is very desirable, especially near transit nodes. Boutique office. Land constraints limit large block development, but small, funky spaces appeal to creative startup firms. San Diego. This sunny metro jumps to number 6 in the Emerging Trends Outlook. San Diego provides a high quality of life and depth of talent that continues driving corporate expansions, especially in the tech industry. Raytheon, Blue Nalu, and Apple recently announced major local projects. San Diego should sustain apartment, industrial, and life sciences demand, but office growth is likely to be constrained. San Diego's best bets: life sciences. Lab space is in major demand, especially in the Torrey Pines area. Vacancy is near zero. Multifamily. Strong demographics and unaffordable homes sustain apartment demand. Target North County coastal suburbs. Industrial. Logistics and warehousing space needed for Mexico trade flows. Otay Mesa border facilities see very low vacancy rates. Creative office. There is a need for differentiated space catering to tech firms despite the overall office market glut. Focus on amenity-rich, flexible designs. Austin. Austin slips to number 5 after 2 consecutive years at number 4. The Texas capital remains a top destination, but is starting to show some growing pains. Home prices have jumped over 40% in recent years, and traffic congestion is mounting. A southern tech hub, Austin boasts vibrant job creation and in-migration, especially from California. Investors should target industrial facilities, new mixed-use communities, and creative offices. Austin's best bets. Industrial. Rapid population growth spurs demand for distribution space. Focus on areas near the airport and the I-35 corridor. Mixed-use projects. Blending residential, creative office, and retail draws residents and companies to vibrant live, work, play nodes. Multifamily housing. Apartment demand remains white hot, despite the surge in overall supply. Target neighborhoods near employers with walkable amenities. Creative office. With high overall vacancy, differentiated space is needed to attract companies and talent in the tech field. Atlanta. This perennial Southern favorite ranks number 4, falling from number 3 in 2023. Atlanta lures residents and corporations with its business-friendly climate, airport hub, and relatively affordable housing market. Financial firms like Bank United continue to relocate or open their headquarters here. Apartment and industrial space remain hot commodities. Investors should focus on distribution facilities along major highways and popular in-town multifamily neighborhoods. Atlanta's best bets. Industrial facilities. There is major demand for e-commerce and logistics space, given Atlanta's airport highway infrastructure. Multifamily housing. Ongoing corporate relocations provide solid apartment fundamentals. Focus on in-town neighborhoods near nightlife. Office space. Creative designs could help backfill space left by pandemic departures. Medical and tech offices are also in high demand. Mixed-use projects. Blend residential, retail, and office around pedestrian-friendly nodes like Atlantic Station. Dallas-Fort Worth. DFW comes in at number 3, dropping from number 2 in 2023. The metro is a corporate magnet thanks to low taxes, minimal regulations, and its central location. Toyota, Peloton, and others recently announced expansions here. The DFW area is expected to reach over 8.5 million residents by 2028. Investors should target industrial space, apartments, and mixed-use projects in affluent suburban nodes like Frisco or Plano. DFW's best bets. Industrial space. Dallas offers a relatively high availability of land for expansion, and major demand exists for warehouses and distribution centers due to its centralized location. Suburban multifamily. Attractive neighborhoods like Frisco, Plano, and McKinney offer strong apartment development potential. Mixed-use projects. Developments blending residential, retail, and creative office space have thrived in areas like Legacy West. Affordable housing. As prices soar, opportunities exist to develop moderately priced housing and apartments. Phoenix. The Arizona capital jumps 7 spots to number 2 in the Emerging Trends Outlook. Phoenix boasts rapid population and job gains as migration accelerates. Phoenix's office vacancy rate remains elevated, but other sectors show robust demand. Investors should focus on industrial facilities and suburban multifamily housing. Phoenix's best bets. Industrial facilities. Major demand exists for warehousing and distribution space given Phoenix's rapid growth. Multifamily housing. Apartment demand remains robust, especially in affluent neighborhood nodes like Scottsdale and Tempe. Office space. With high overall vacancy, opportunities exist to develop creative new medical and tech offices. Mixed-use projects. Blending residential, retail, and creative office uses holds major appeal, especially in emerging neighborhoods. And coming in at number 1, the home of yours truly, Nashville. Music City tops the list again for the 3rd year in a row as Nashville retains its broad industry appeal. Corporate relocations continue from auto, healthcare, and tech firms. Plus, Nashville offers entertainment amenities and affordable housing relative to other growing hubs. Investors should target creative office space, mixed-use developments, and multifamily projects despite mounting competition. Nashville's best bets. Creative office space. Corporate expansions provide the chance for differentiated office buildings catering to specific industries such as medical. Mixed-use projects. Developments blending residential, entertainment, retail, and creative office space still hold major appeal. Multifamily housing. Ongoing population growth sustains apartment demand despite the mounting supply. And affordable housing. As prices rapidly appreciate, opportunities exist in building moderately priced apartments and homes. And now that you know what the top commercial real estate markets are going to be in 2024, check out this video here on the future of office space.